and welcome to July's market update. You get me, Brett, for this month's video as Darren takes a little bit of well-deserved time off. And you're going to want to stick around for the whole video because our market is starting to shift a little bit and things will be a bit different from this point on in the Calgary real estate market. So our update this month is a bit about swings, just like a proper Calgary stampede and the hangover that you get afterwards. We're going to discuss the market at a high level, and we'll also cover all of the asset classes individually, including some advice for buyers and sellers. Ready for the latest intel? All right, well, let's get going. Okay, so let's kick this off with my favorite real estate statistic, months of supply. The reason it's my favorite is because it serves as a gauge between supply and demand, and it can be counted on at any time of the year in any real estate market anywhere on earth. Price and sales volumes don't really give context, but over 3 months of supply is considered a buyer's market, and under 3 is considered a seller's market. And in July, Calgary reported a 2.37 months of supply, lower than last year, but not quite as solidly in seller demand territory as we observed earlier in the spring. Now, seeing the statistic go down is actually a sign of the market heating up, as the lower the number is, the less inventory there is relative to pace of buyer demand. So relative to where we were in 2021, we are experiencing more demand, but in terms of the 2022 trend, well, we're actually softening up just a little bit. As you can see, this number is climbing up from a low of about 1.4 months of worth of supply earlier in the year. Now, don't let that worry you though, as Calgary has had a great year and prices are holding, as our average price is sitting comfortably at $540,000 and up over $50,000 from this point last year. A great improvement for Calgary. That being said, if you take a closer look at the trend over the last few months, what you'll see is a bit more indicative of what it actually feels like out there right now. Flat over the last few months despite strong year-over-year results. And you can see this trend across pretty well all asset classes in Calgary, with detached prices up 15% over last year at $643,000, but looking to have stabilized at the midway point of the year. Semi-detached and row pricing are about the same, increasing by 12 and 15% year-over-year to average prices of $576,000 and $362,000 respectively. Okay, now I'm going to bring a bit more focus on apartment condominiums for the month of July and pause for a moment to look at this graph which illustrates an important trend. From my perspective, one of the brightest spots of 2022 so far has been the recovery of the apartment condominium segment in Calgary. For years, I have been lamenting how soft it has been, but the strong spring market has us returning to balanced market territory for condominiums, as we have finally drawn down on the high inventory levels and achieved a balanced months of supply metric of 3.0. But there's a catch. The reason I wanted to single out apartment condos is because they are unique compared to other asset classes, in that it is much easier for developers to add supply of apartments, which makes this asset class much more volatile to swings in demand. So buyers of apartment condos should be a bit more cautious than they were earlier in the spring, as we are starting to see more inventory hitting the market while sales are dropping off, which means prices will level out and may even decrease heading into the fall and winter of this year. I just don't think that this segment will be quite as resilient as the freehold asset classes if demand stays flat with more and more new buildings coming to market. Okay, back to the overall Calgary market. Now, if you take a look here, you can see that prices are starting to stabilize and even drop just a little bit from the peak in the spring. But more importantly, we are starting to see a trend of more and more inventory and fewer sales, which means we're looking at a softer market condition heading into the latter half of the year, which is traditionally slower than the spring and early summer market anyways. So a great time to buy for value, as things will be more balanced for the rest of the year. But what about if you're a seller? Should this trend concern you? Well, yeah, you may have missed the peak of the market earlier this year, but hindsight is always 20/20, so don't beat yourself up too badly about it. Prices are not as sensitive as sales volumes when it comes to reacting to market factors. I expect you're still going to achieve a healthy price for your home in the back half of the year. It just may not come with several buyers competing for it. all at once. Okay, so the market is cooling a bit and we are inching closer to a more balanced market. Is there anything else that we need to know about Calgary real estate in July? Well, we should pause and take a moment to look at Calgary from the big picture view and see how it stacks up against the two biggest real estate markets in the country. First up is the GTA, which sits at an eye-watering price of over $1.2 million. And next is Vancouver, which is actually pretty close to the same price. Now, Calgary is less than half the price of these two markets, even with a 15% increase from our 2021 pricing. That is a win for both buyers and sellers, as each can have confidence that our market has a lot of room to grow to catch up to these two centers, which surely have a lot more to lose than we do. Thanks for watching, everybody. I hope you found the update informative, and we'll see you next video.